Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilberg, and I'm joined today by Bob Icino. Welcome, Bob.
Thank you, Jeff.
Well, happy holidays, and it seems like the markets are enjoying the holiday season as well. Today we had more optimism. The market continues to focus around the U.S.-China trade tariff conversation and the delay of these tariffs on the December 15th deadline that really bolstered the markets today.
Yeah, that is right ahead of us, that tariff deadline, and happy holidays to you as well, by the way. And it seems that every time we get optimistic trade news, we get risk on markets. The only time that didn't happen is when we got the strong jobs report, and that was also risk on.
No, it's interesting. So quick question, will we see these equity markets continue to finish strong in 2019?
I think so. I mean, there is risk whenever you're talking about trade talks with the U.S. and China, but so far everything looks good.
All right, understood, and great point. Let's move to this first lightning round, pal. You ready?
I am ready.
Dollar dips. Well, it's interesting. The year of 2019, let's look back on these last 12 months. What has the dollar done? It's been pretty stagnant to move lower. And that's all due to the fact that the Federal Reserve, about face, turned around from their commitment to 3 rate hikes. Now they're in the year of 2019 with 3 rate cuts, and all of a sudden gold is really staying vaulted above 1450.
Yeah, it is. If you believe the Fed is out of the picture, then you believe that the data is not going to change. They're not doing anything currently according to their words, but they are data dependent. So the example I would like to look at, it's pretty aggressive actually. I'm selling the December week 4, 1475, 1450 put spread in gold. Selling at this put spread actually allows an investor to collect a whopping $900. Remember, this is aggressive.
Well, it's interesting. We talk about option premium all the time on Striking Options, and here, this is at the money. Now, we've had a lot of movement and volatility, so certainly the price of gold went up above $14.90 earlier, and now here we are at the money. We typically look at strike options about 1% to 2% of the money, but I like the fact that you're capitalizing the vault in option premium, so you're going to collect nearly $900, substantially more than the typical put we look at here on Striking Options.
Yeah, I expect gold to stabilize, possibly rally a little bit. I actually sold the euro this morning and then covered it because I think the dollar is going to continue a little bit lower. Historically, inverse relationship between the dollar and gold.
And lastly, I think it's 1475 being at the money put is really exciting because that's where the Fed futures was in the underlying futures contract, around 1473 with the at the money vol around 9.5. But let's talk about that 1450 put that you're actually buying to mitigate risk and define where your risk is actually at on this trade example.
Yeah, if we're wrong on gold, this example gives us some downside protection because if gold falls, it's likely to fall a lot more than you would expect.
Critically important, 1450, a lot of support there, but once that support is sliced, it could be some selling pressure. So please remember that these are trade examples, not trade recommendation. Let's move to the second lightning round, pal.
Let's do it.
FANG stocks. Well, here we are. The FANG, primarily Facebook and Apple have contributed tremendously to the FANG stocks. We're seeing Facebook up over 50%, Apple up over a whopping 70% year to date. That really brings focus onto the NASDAQ 100. We talk a lot about the E-mini NASDAQ 100 here, but what are your thoughts about the NASDAQ 100 in the year 2019?
What's interesting, also biotech outperformed quite a bit, which is included in the NASDAQ. And you look at it, that outperformance all came in the fourth quarter, so that could end going into next year.
So a trade example I want to utilize, we always talk about mitigating risk, Bob, and one of the opportunities here, instead of using options on futures, I want to go into the basket of the micro E-mini NASDAQ futures. The CME Group launched those earlier in 2019. It's been just a phenomenal product. Remember, the micro E-mini NASDAQ is 1/10 the size of the E-mini NASDAQ future. So the trade example I want to utilize, if you want to mitigate risk, you can potentially sell 5 micro E-mini NASDAQ futures at that 84.50 level. And additionally, if the market moves higher here, as you said it may, going into the end of the year, you can sell another 5 lot of the micro E-mini NASDAQs at 85.50. These would be limit orders you could utilize. And also, once they're executed, you would put a stop up above 87.50. I think buying 10 of that allows you to notionally mitigate risk in a portfolio. Say you have exposure in the FANG stocks of about $168,000. If you were able to sell 10 of these micro E-mini NASDAQs, that would fully hedge that portfolio.
And the other thing is, as your portfolio, if it were to go up, you can sell one more micro and then one more micro. The detail that you can manage and risk with the micros is phenomenal.
Yeah, it's a fine-tuned power tool. But what's interesting, we look at the 200-day moving average in the E-mini NASDAQ 100, right around 8,000. So if we do see the market pull back or just take a little break, as it comes back, you're absolutely right. You could be buying 1 lots in the micro E-mini NASDAQ to cover the risk mitigation that you established at that 8,500 level.
And that 200-day moving average, widely watched, so it almost becomes self-fulfilling. It's a great point to look at.
And we put a lot of information at you today about the micro E-minis. Check out the CME Group website. There's a lot of information on the micro E-minis. It's a tool you could potentially consider putting in your toolbox in 2020.
Yeah, always use the products available to you. This particular section, I think 2020 is the year of the micro.
All right, Bob. Well, thanks for coming on as always, and make sure you tune in every week as we will continue to strike options.